Is everybody okay? That's always scary. People just, I don't know, they just don't think.
You're ready. Take your time.
Okay. All right. Good morning. Oh, sorry. Is it on? Okay. Good morning. The time is 9:06 on Thursday, May 16th. I'd like to call the meeting to order.
We're going to do a roll call vote, and we're going to go into order of the agenda. When I call your name, please confirm your attendance. Tony Royce here. Matt Crawford sitting in for Matt Rudnick.
Here.
Paul Gerard sitting in for Matt Zabo.
Present.
Petty Santos sitting in for Holly Walcott.
Here.
Janita Igualier.
Here.
Marlene Fonseca.
Yeah.
Chad Boggio.
Here.
Esteban Lizardo.
Here.
And Lisa Palombi.
Okay, awesome. Let's see. Do we have any public comment?
For those who are participating virtually, if you can press *9 on your phone to be able to put it to the speaker queue. For anyone who's in the room, please bring your speaker card to the front. Seeing no one in the room and seeing no one in the queue.
Okay, awesome. Then we can go ahead and move on to our action item. Committee report number 2422. Joint request for proposal.
I will go ahead and start this off. This is a massive effort for staff to put together. We are down to the wire of getting everything together in this 676-page report. We decided that we're going to go through this kind of in a somewhat structured way. I'm going to go ahead and give you a brief background of to where we are and why we're here. And then we're going to go through each individual benefit, life, disability, and then accident. With staff's review of where they came through scoring. Then we'll go over to our consultant Keenan for their peer review, and then wrap everything up. And then you can ask questions anywhere through this process. So as we are, the overall recommendation is to have the same vendor selected for each of the individual services. Yeah, the committee may remember this is 3 separate services, 3 separate contracts. We did a joint RFP to be able to try to enable bundling if a vendor wanted to bundle, but they could still offer their services separately, or they could still bid individually. The end result that staff is recommending is going to be the same bidder for all 3 services. The background, we brought the RFP to the JLMBC in January. You did ask for some revisions, which we're going to talk about in just a second. We went out to post it to RAMP. We had a number of interested parties. These are the services, or we had asked for a number of services to continue our existing level of coverage across all 3 benefits, but we also asked for a number of enhancements. The services that we have for life and disability and AD&D pretty much been the exact same coverages since 1996. So we were looking for both coverage enhancements and service enhancements for the member experience all around. So we asked for a lot. We had a total of, after we did the pre-proposal conference and actually had proposals submitted, we had a total of 9 bidders that had submitted a proposal for our disability section. Our life insurance benefit, 9 bidders that submitted a proposal for accident insurance benefit, and then 8 bidders that submitted a proposal for the disability benefit. Our scoring process is the same as I identified in the RFP. It did not change. There was a scoring between qualitative and quantitative. The end score result ended up being the same number of points per question. So the qualitative scoring was identified as a value of 1 to 5 points. The quantitative scoring was 1 to 5 points. So every question had the same value. The total after the questions were scored, they were weighted. And that was a conversation that we had in JLMBC of having the weights heavier towards the plan design portion. These were the weights that we published. So plan design in each the different benefits was 30%, the highest weight of everything. That's the same weighting structure for life insurance, disability insurance, and accident insurance. And then we are getting down to the end result and findings. So I am going to have now move on to, we're going to do it one at a time. Our staff is gonna go over basic life, or the life insurance benefit first, and then we'll move on to disability next.
Good morning, everyone. Ruby Ann and myself will be providing you information on the life insurance RFP. And we're both analysts with the Employee Benefits Division. So on the report, I'd like to direct you to section F, which includes the summary of the final scores, beginning with basic and supplemental employee and dependent life insurance. In this section, you will find the review committee scores for all 9 proposers, and then underneath it's followed by Keenan's final scores. The review committee's overall scores for the 9 proposers were fairly close, and it was determined that each proposer is capable of providing the life insurance services for the LAWL program at its base level. Some proposals were consistently more in line with the objectives of the RFP for basic and supplemental employee and dependent life insurance. As you can see from the chart on the report, MetLife's proposal was ranked higher than the other proposals at the conclusion of the evaluation. Now, down on page 28, you'll find the overall findings of the scoring. The overall results of the review committee scoring reveal a close scoring in a number of subjects amongst the proposers. However, upon completion of the evaluation, MetLife's proposal received the highest score from the review committee. Overall, the responses tended to be the most favorable. The overwhelming majority of the responses met at least the satisfactory standard, with very minimal, unsatisfactory, or incomplete answers. In the majority of the subcategories, including plan administration, plan sponsor, claim processing, call center, and plan design, MetLife scored the highest. MetLife received the highest score for their answers to the joint RFP's request for basic and supplemental employee and dependent life insurance services, and through their responses show that they are able to provide automation enhancements to the selection of insurance by establishing a direct connection with TELUS, the third-party administrator of the LAWL program, for evidence of insurability. They show capability to provide automation of claim processing for beneficiaries, reduce the amount of paperwork associated with processing of claims for the employer, automate a waiver of premium option, provide a funeral assignment in conjunction with additional services immediately upon the filing of a claim. They can provide a member advocate and a dedicated email address to assist employees and beneficiaries with all the aspects of coverage and claims. They are able to provide comprehensive educational resources, inclusive of customized sites, and a dedicated communication and enrollment specialist to provide an array of reporting and metrics. And they're able to provide the city up to $35,000 annually for auditing services. Now, on the chart on pages 28 and 29 of the report, this highlights how MetLife's responses compared to other bidders in certain areas. The first item listed under service areas asks bidders to confirm whether or not they will provide coverage on a no gain, no loss basis. That is confirming all members currently covered will remain covered at the same coverage level under the new plan effective January 1st, 2025. We also ask bidders to confirm that they will waive the active at work requirement, which requires members to complete 1 full day of active at work in order to be considered eligible for benefits. This ensures members that were insured under the prior plan will become insured on the effective date of the new plan without meeting the active at work requirement. The Hartford, MetLife, Securian, and Standard agreed without any additional conditions. The second row requests that all bidders guarantee that coverage will continue for all currently insured members by the policy on the plan effective date, and all the vendors agreed to do this. We also wanted to review the claim processing time and the percentage of claims that the bidders were able to file within 10 days. And the majority of bidders were on par with each of this. The city also requested a dedicated account team as well as an advocate for members. All bidders agreed to providing a dedicated accounting team. MetLife agreed to a dedicated client service consultant as well as a senior account executive. When asked about the member advocate role, Aflac and Securian could not guarantee one, while New York Life and Reliance Matrix were open to discussion if selected as a successful candidate. Hartford, Lincoln, MetLife, and Voya agreed to assign a member advocate. Lastly, vendors were asked if they could provide funeral assignments, and all vendors agreed to this. These are a few of the key areas that we wanted to highlight in today's report. I'm going to go ahead and hand it over to Benedict Paz, who will begin the discussion with disability.
Good morning. My name is Benedict Paz, and I'm the administrator for the Disability RFP. So for this portion of the presentation, Ruby Ann and I will be giving a rundown of the Disability RFP in purple, similar to what Isela and Ruby Ann discussed. In section F, you will find the review committee's scores for the 8 proposals for disability, followed by Keenan's final scores. So Ruby Ann will discuss the scores on page 30 and overall findings on page 45. Then I will discuss the key services highlights on pages 45 to 48.
As Benedict mentioned, the scores are highlighted on page 30. The top chart shows city scores, and below that is Keenan's score. You see highlighted in pink, MetLife did score the highest for this part of for this benefit. Overall, MetLife scored the highest in most subcategories: administration, sponsor, website, plan sign, and plan cost. MetLife tied for field with Lincoln, New York Life, New York Matrix. MetLife also tied for communication with Lincoln and Voya. MetLife indicated that they are able to provide multiple options for an employee to file a disability claim. And in the unfortunate scenario that an individual is incapacitated or otherwise incapable to start their own disability claim, MetLife indicates that the employer or a relative of the employee can start the claim on their behalf. I wanted to point out that while this doesn't happen often, it's great to have that option for employees that fall into this category. MetLife had expressed experience in working with the city's third-party administrator, TELUS, and they also agreed to change the city's current benefit waiting period for employees receiving injured on duty pay, and to further discuss with workers' compensation how to improve and integrate information to improve the claims of members with work.
Thank you. Now, for the chart on pages 45 to 48 of the report, highlights MetLife's responses compared to other bidders in certain areas. So for the no loss, no gain, this is to ensure that in the event of a plan change, all currently covered members will continue to remain covered at the same level of coverage was when the new plan becomes effective January 1, 2025. All vendors agreed to this except New York Life. For the waive actively at work provision for initial enrollment, as was mentioned in Life, this requires members to complete 1 full day of active work in order to be considered eligible for benefits. The only vendors who agreed were Hartford, MetLife, the Standard, and Voya. For the dedicated member liaison, the city requested if a vendor can provide a liaison to assist members with questions/claim processing and to act as an HR liaison per each city department. Every vendor agreed, but New York Life and Reliance Matrix stated they will discuss it if selected as the successful candidate. For outsourcing, the city wants to know how much of the proposal services are outsourced, and those that are US based. Several vendors stated they outsource less than 5% of services, such as Aflac, Lincoln, MetLife, and the Standard. Hartford, New York Life, and Reliance Matrix stated they do outsource, but did not state the percentage if what is outsourced is outside the US and or confirm if they will outsource if selected by the city. For claim processing, the city wants to know how long it would take for a vendor to process the short-term or long-term disability claim. In our experience, one of the biggest stresses for city employees while filing a disability claim was the amount of time it took to process a claim. Most vendors reported processing times of anywhere from 3 to 8 days for short-term disability and 20 to 38 days for long-term disability. MetLife stood out for reporting a processing time of less than 1 day for short-term disability and less than 2 days for long-term disability. Or if a claim file can be filed electronically, this mostly has to do with claimant convenience. Most vendors agree to electronic filing, but for AFLAC, electronic filing is for short-term disability only. And for VOYA, electronic filing is for long-term disability. For percentage of claims denied, most vendors did not disclose their numbers, with Lincoln and MetLife being the only ones that did disclose. Of the two, MetLife reported a smaller denial percentage. For appeals, all vendors answered they will send appeal documents along with the denial letter. Should the appeal be received, various personnel will review the appeal depending on the vendor system. When a decision is made, the employee is notified of the appeal decision. Both Hartford and MetLife, where applicable, mentioned that they will also notify the employer of the appeal decision. For customer service representative or CSR wait times, of the disclosed wait times, AFLAC had the fastest with 6 seconds. MetLife had the second fastest of 17 seconds. Most vendors had times between 25 to 30 seconds, and Standard had a time of 49 seconds. For integration with workers' comp, vendors were asked to describe their integration/interaction for disability and workers' comp. Most vendors offered some degree of coordination with workers' compensation. So in AFLAC's answer, they only mentioned that they can do a phone call warm transfer. Thank you for your attention so far. This concludes the disability section of scores and some of the key areas we wanted to highlight for today's report. Now we're going to pass it to Matt and Brianna, who will be covering accidental death and dismemberment, or AD&D.
Thank you. Thank you, Benedict. Good morning, all. My name is Matt Amanke, administrator of the AD&D RFP. I, along with my colleague Brianna, will be covering the AD&D portion of this presentation. Some proposals were consistently more aligned with the AD&D RFP's objectives. Ultimately, MetLife's proposal outranked the other proposals with Voya, Securian, Lincoln, Standard, AFLAC, Hartford, New York Life, and Reliance Matrix following, ranked in descending order. Those bidders were following afterwards. The review committee's average scoring results for the proposals are shown in this chart in alphabetical order. In addition, Keenan's review and scoring results also ranked MetLife the highest. These results are shown in the next chart. In accordance with the joint RFP evaluation criteria, well, actually, I think Paul already covered that part. I'm sorry. Yes. In our evaluation of AFLAC's proposal, we found that they outlined the steps for paperless or paper-reduced claim processing. They confirmed that there will be no late payment fees or penalties charged to the city, that they do provide a dedicated email address, that they have the capabilities for city employees to file a claim electronically, and will accept fiduciary responsibility for all claim decisions. They will also provide an account team / manager and participate in city meetings. For plan administration, these were some of the main things that we were looking for. And for the most part, all the vendors met these expectations. AFLAC, for example, the enrollees are not able to submit claims online, and they didn't provide options to expedite funeral assignments. As far as member services, they have a short average wait time of 6 seconds, And they generally receive satisfactory ratings overall, with the exception of their description of the appeal process. Their response lacked clarity on several crucial aspects, including establishing a timeline, informing the employee about submitting additional information, and specifying the method of communication, such as through letters or phone calls. For plan design, they do allow absolute assignments, including funeral home and collateral assignments. However, their policies are not portable nor convertible, meaning there are no options for continuing insurance after employee ends. And then moving on to Hartford, you know, for they met they did meet most of the criteria we were looking for plan administration. However, they did not elaborate upon the options for funeral assignments. Also, an organizational chart was not provided as requested, and it's unclear if live chat is supported. They do have the capability to provide Spanish certified representatives, CSRs, along with access to over 200 languages at no additional expense. However, the proposal does not specify whether these are dedicated CSRs to serve the city specifically. Another concern was that they do not monitor member satisfaction, including complaints, grievances, or appeals. For plan design, they do offer portability and provide multiple settlement options. However, they did not indicate that they would waive the active at work requirement.
For just the time check, could you just go for MetLife?
Yes.
Go to the next phase.
So MetLife, they met all the criteria we were looking for plan administration, except for live chat. They do not offer that option. And member services, one positive point was 85% of member calls are successfully resolved during the initial contact. Their coverage is portable. They offer various settlement options. They allow assignment of benefits, and they also ensure coverage without any loss or gain during lapses. I will now pass it to Brianna, who will discuss the other bidders.
Instead of just because we're at in time, maybe we could hold on that until we get to the enhancement section. So our next step would be to have Keenan get their peer review. This is staff's review of just services. They didn't talk about financial, if you noticed. So we'll have Keenan do some review of their peer review of the overall 3 bidders. They're also going to talk about financial, and then we're going to come back and talk about the service enhancements. So to date, what you've heard is mostly a review of actual services in force today, not the improvements that we want to make or that we asked for. So if we could, sorry to mix it up right now, but if we could have Keenan come over.
Chairs this morning. Good morning, everyone. My name is Megan Gardner. I'm with Keenan and Associates. I'm joined today by Gordon Don, also with Keenan, and we have some peers also online, Melissa and Alex and Aaron here, and we are going to go through our analysis of the RFP proposals. Again, 9 bidders. There was quite a lot to go through. 8 proposals for disability and 9 for each life and AD&D. Again, the city covered a lot of this, so I'm going to go ahead and skip in our presentation to page. Actually, we're going to go to page. We're going to go to page 6. I'd like to tee up a little bit about your current plan design. and then talk about some of the enhancements and why they're important. Currently, your basic life insurance benefit provides a $10,000 life insurance policy for your full-time and half that $5,000 for your part-time. As Paul had mentioned, that's been in place for quite a number of years. And as we discussed at a prior JLMBC meeting, it may not be adequate in the times in which folks need to make their final arrangements, or their family members need to make final arrangements for an employee. So looking at your match to current program, but also requesting enhancements. The enhancements that we did solicit through the RFP as optional coverages for consideration were increased basic life amounts for employees up to a $50,000 policy level to give adequate cushion for final expenses and for their loved ones. So that is your current and enhanced request. Moving on to the next page, page 9. Your voluntary life program for your employees includes an option to purchase 1, 2, 3, 4 times annual salary up to $1 million. And then for a spouse, they have a choice of flat policy amounts, 10,000, 25,000, 50,000, 75,000, up to 100,000. So they have some options there for spousal voluntary life. Child coverage is a flat amount of $5,000. Part of the RFP, again, when the enhancements was to look at areas where we could perhaps increase or provide value for employees. So we did look at options to change the 1, 2, 3, 4 times to maybe a flat policy amount similar to the spousal coverage currently, up to that same $1 million in increments of 10,000. That was one option that we looked at. We also looked at increasing the option for spousal coverage up to a higher dollar limit, $250,000. And then we also looked at increasing child coverage up to a $20,000 amount, so that again, there's funds there to help take care of final expenses. And that's something we all want to think about, but when we need the money, it is nice to have. So from your current plan to the enhancements on the voluntary life side, that's what that looks like. Moving on to slide 10, for your current AD&D program. Your current program is increments of 50,000 for employee, up to 500,000 in coverage. Spousal coverage is tied to your current employee coverage and provides a benefit of 60%. And then for child, same thing, it's tied in a percentage basis to that coverage at 20%. Part of what we requested is kind of removing the ties between employee and family coverage and having them kind of stand on their own up to certain dollar amounts. And then also looked at your current coverage configuration is employee only or family, no in between. So we looked at what does that look like for employee, employee plus spouse, and then kind of a family convention. For moving on to your disability program, you currently offer a core and buy-up option for your disability. The big note here is for your current core plan, which is paid for by the city, it is a 50% benefit up to a weekly maximum of $860. Your buy-up is higher at 66 2/3% benefit up to a weekly benefit of $2,771. And this is significant in that when we look at your current weekly maximum, it's kind of on the low side for employees. If anybody had a need to go out for their own personal illness or injury and they were going to integrate time, chances are they were going to be left short with respect to what it is that they have from their current pay. When we looked at this, this coverage only will provide, 100% income replacement for those individuals who make $89,000 or less. And that's about, that means you're underinsuring on a core basis about 12,768 employees throughout the city. So one of the enhancements we looked at was increasing that core benefit up to a kind of an indexed amount in line with what we see with the state disability program at a maximum weekly benefit amount of $16.20 per week. And so that was one of the enhancements we requested for the short-term disability plan. That means that your population would only have about 1,600 folks who would not be underinsured if that enhancement were to be put in on the short-term disability side. On the long-term disability side, it's a very similar story. It's a 50% benefit on your core plan with a maximum monthly benefit of about $37.26. Again, a similar story, a little bit of underinsurance there. If somebody is out for that length of time and they get onto that long-term disability because your short-term disability claims do warm transfer or dovetail into long-term care, long-term disability coverage, they would not be able to have 100% income replacement if they were integrating or what have you. So we did request an enhancement option to this program up to a $5,000 monthly maximum, which is a modest increase. Your buy-up program at $12,000 does seem fairly robust. So that's what we looked at. And then for all of these programs, we did also request certain enhancements that will improve, again, the member experience as we talked about in prior committee meetings. That means things like instead of a checking account where funds are held for a certain level dollar amount, it's a lump sum payout to beneficiaries at the time in which they need life insurance funds. We talked about or looked at and requested things like adding a suicide exclusion, meaning if you are enrolled in a voluntary plan and been covered by the plan for at least 2 years and God forbid the death was a result of suicide, a benefit would still be payable. So kind of a vesting period. So we looked at enhancements that were going to increase the member experience and provide value to family members when they most need it on a lot of different fronts. As far as your current program cost, I'm jumping to slide 13. We provided a snapshot of what that looks like by program for each life, AD, and disability, and with an overall total. And this is an aggregate for both the employer and employee paid coverages. So your total program for all three coverages runs at about 26.8 million annually. And this is based, and it can fluctuate based on the number of employees that are participating in certain programs, but this is based on the most recent census that was used as part of the RFP as a snapshot in time. Again, RFP objectives were clearly the committee was most interested in enhancing the member experience, providing enhancements and resources and education that help the employees when they most need it. Hands down, life insurance, AD&D, and disability are the times when employees need the most help because they're dealing with other things. So that was what we developed the RFP, those objectives in mind, ensuring that those enhancements and providing effective tools for the city to also efficiently administer the programs. Moving on to page 16. Again, the city touched on this. All bidders, 9 of them met minimum qualifications. They all demonstrated strong financial ratings. And we did provide, did I just jump past that? Yes, on page 15, we did provide their disclosed financial credit ratings for you to see. This is not something that they were rated on, but it was good to note that they are all on good footing and again, meet that minimum proposer requirement. I'm going to jump ahead to slide 19 real quick, if I may. So we just went over all the changes and enhancements. Each of the city staff went over various aspects of the proposals that were received. It is important to note that the RFP did request bundled and unbundled pricing, and it really was up to the proposers what they wanted to bundle or unbundle or what they wanted to bid on. At minimum, we wanted them to match the current program so that the city could continue the program as it was at a minimum base level. Above that, they had the option to bid in a variety of ways. Most all of the bidders did propose on a bundled basis. Some, including Lincoln and New York Life, bid on a bundled only basis, meaning they were not willing to split the lines of coverage up. Others proposed on a bundled and unbundled basis. However, their rates for their unbundled proposal were the same as their bundled. So that gave the city flexibility if they needed to look at potentially different vendors for different lines of coverage. They had those rates and had that ability to look at it along those lines. So there was a lot to consider with respect to the scenarios and financials for bundling and unbundling. As the city noted, moving on to slide 20, we also requested a look at a whole life option for city employees. Only one bidder, MetLife, provided a whole life option. It was a voluntary whole life option, but they are the only ones that did put something forward for us to review. As far as underwriting is concerned, we took a look at all of the caveats that they included with their proposals. And on the whole, there was nothing overly concerning or way out in left field, as it were, with respect to the requirements they had. We saw the normal and typical minimum participation requirements, the right to re-rate if the enrolled population changed by a certain percentage, usually 10, 20%, depending on the bidder. So there was nothing in the underwriting that we saw that was particularly concerning. However, we did provide some context on a ranked basis for those that had perhaps the fewest requirements or caveats attached to their underwriting. And as you can see, we kind of ranked them there with the top three being MetLife, Voya, and the Standard. We also requested performance guarantees. Part of this process was to review and update performance guarantees to ensure that they were addressing member services, the member experience, but also items that are important and relative to today's day and age, such as data security and claims processing. So we did scrub up those performance guarantees and request that bidders meet 5% for life, 3% for AD&D, and 5% for disability at risk, and agree and take a look at those individual PGs to see if they agreed. Some more than others agreed in whole to the PGs that were requested. Others did have some modifications, perhaps to calculation and data elements for the basis of the PG, and then others did not agree to some at all. And so in looking at the performance guarantees, and again, taking a look at who was most agreeable in whole or in part, we did come up with a ranking with respect to the responses for those performance guarantees. And you can see there the top ranked were MetLife, the Standard, and Voya overall. Another component of the RFP was implementation and audit credits. In the event that there is a vendor change, it is a massive undertaking and there's lots involved with that. So we wanted to ensure that the city had appropriate resources in the form of an implementation credit, commitment towards that, and then also on an ongoing basis to ensure that claims are being processed appropriately and the city has complete transparency in that, and ongoing credit for audit services, outside audit services were requested. We did ask the bidders to confirm their agreement to that and tell us how much they would be willing to commit to. And so on the next three slides kind of breaks down what they committed to for that implementation credit and auditing services. I do want to note MetLife did commit the largest dollar amount in funds for both the implementation and audit credit. So that was nice. Definitely a way to demonstrate their commitment to the city. As far as the member liaison, and I know city staff touched on this just a little bit, but the current program does include a member liaison to help relieve some of the workload for the city staff and to kind of deal with some of those technical and high complex cases that might come through in the form of a life claim, AD&D claim, or disability claim. And so to kind of keep that match to current concept and continue that element of the contract, we did ask the bidders to put forth their commitment towards keeping that member liaison in place. And some said no, they would not provide that member liaison. Others did say that they would provide some form of alternate, maybe a little lesser or different concept for member liaison, and yet others agreed in whole. Those that agreed in whole are Lincoln, MetLife, and the Standard. Yet others, such as Reliance, said that they would be open to discussion if they're selected. From the member experience, there was a lot of conversation with this committee about ensuring that claims are handled appropriately and that members are being taken care of when they are in and at the time of claim. And so we did want to highlight that from a member experience perspective, the RFP did really look to having dedicated claims teams and dedicated claims resources for your employees, that they could have that a more personalized attention when they're going through a claim. So we have shown here on slide, I covered up the slide number when I did this, I apologize, but the slide that's shown on the screen, dedicated claims team, Lincoln, MetLife, Reliance Matrix, the Hartford, the Standard, and Voya will provide a dedicated claims team. Aflac will not provide, Securian will not provide, and New York Life will discuss if they are selected as a finalist. As far as a dedicated email address, we felt this is very important so that your members don't get lost in the shuffle of a customer service email address. We did get some commitments on providing that. More of the bidders were willing to provide that than the dedicated claims team. You can see that there online too. We did ask about hours. We wanted to ensure that your members had access to filing a claim, asking questions about their claim, and being able to be taken care of. So we did ask about their customer service hours. I will note that a number of the bidders do have, in the case of disability, a personalized claims manager that handles their claims, and that the customer service hours would be the general customer service hours and not necessarily their claims manager hours. But nevertheless, they can call in and somebody could answer a question about their claims if need be. So the customer service hours are shown here on the third line down. And then average time to answer. It's great that they all provide a customer service line, but how quickly can you get to a live person? That's really where the rubber meets the road. And we do have a number of responses here that kind of ran the gamut. Some considered that proprietary and confidential. Aflac did have the best time in a 6-second answer, average speed to answer. New York Life, 25 seconds, Reliance Matrix, 30 seconds, Securian, 3 minutes. The Hartford provided their goal and where they were at for 2022's metrics and reporting, 2023 not yet available. The Standard, 49 seconds. And Voya broke out the difference between life and disability in 30 seconds for life and AD&D and 25.4 for disability respectively. And then, sorry, I skipped over MetLife, 19 seconds for life and AD and disability, 17 seconds. So all good things there. When it comes to average time to pay out assignment of benefits on the life side, we did want to know how quickly assignment of benefits could be paid. That really is a critical time for a life claim. And most often, family members and beneficiaries do not have the funds to pay for a funeral. It is thousands of dollars these days. And so assignment of benefits is critical. That means the policy will pay directly to a funeral home to cover the cost of those final expenses. So looking at the average time to pay out assignment of benefits, again, it did run the gamut a little. Aflac 1 day, Lincoln 1.4 business days, MetLife 96% of claims within 5 business days. New York Life did not track. Reliance Matrix 10 days, Securian average of 2.53 days, the Hartford 95% within 5 days, the Standard 2 business days, and Voya 6 business days. So it really did have kind of a wide range there. Also on the life side, again, there are a number of provisions in your plan that could result in a denial. of a claim, such as, for example, a suicide exclusion. If right now, currently, suicide is not a covered benefit, that could result in a denial. So we wanted to know what percentage of claims are denied for each of the carriers. And again, you can see it is across the board, with several saying that they could not provide or was proprietary. Similar story for AD&D. I will say, just for context, AD&D claims do tend to have a higher percentage, just based on the way that the program is set up. It is based on very much a personalized approval based on injury and the circumstances surrounding, but nevertheless, it does tend to follow a little bit there. AD&D claims very similar to the life claims. On the disability side, this is where I think a denial probably is most visible. This is when obviously income replacement is not coming in for an employee, and that tends to result in phone calls and things. So looking at the disability denials, a number of them did say it was proprietary and confidential. They did not want to provide that, but those that did, such as Lincoln, MetLife, and Voya, provided some good stats. For short-term disability, for Lincoln, 18.8%, long-term disability, 24.5%, MetLife, again, 14% for short-term, 20% for long-term, and Voya, 22.7% for short-term, and LTD at 16%. The other provision in the RFP asked about exceptions to the RFP. And this is where we really give the bidders the opportunity to say, hey, we can or cannot do this, for a variety of reasons. And so we've noted some of the exceptions that were most notable here. On the whole, they had to do with needing to file with the state of California to ensure the plan is regulated and on file with the state in order to provide certain aspects of the plan. Overall, not a lot to be concerned with the exceptions. They are definitely something that is typical and normal for new plans coming in when they're adopted, and is not out of the ordinary. These are all things that I think, depending on who is actually selected, it could be worked through. Filing is normal. It's part of the process of implementing a new plan. So not overly concerned with the notable exceptions that were listed in the RFP. And last, but certainly not least, before we start to get into kind of the financials references, we did request references for both current and former California public agencies. Several of them provided those. Some said they would provide if they were selected as a finalist. So we didn't, for those folks, have much to look at. However, those that we did get back for the bidders, they were very good or excellent overall, nothing overly concerning in the references. This is one area, though, that I do recommend as part of post-award negotiations. We kind of do a little bit more digging into references just to validate and verify, depending on who is selected. All right, financials. This is a very big and colorful chart. There's a lot going on here. There's a lot to look at. We started with your match to current financials. And again, this is alphabetical order, not necessarily lowest to highest. But we wanted to take a look at what your current program is, just continuing the program as it is today. Broken out by life, both basic life and voluntary life. We wanted to show that delta for you. Overall life program cost, followed by your voluntary AD&D program. And then again, followed by your core and your buy-up disability costs. Overall, Aflac is coming in at 9% under current. Lincoln 10% under current, MetLife 6.5% under current, New York Life 16.7% under current, Reliance 9.4% under current. Securian, you can see their life and AD&D quote. They did not quote disability. So on the next slide, we have a carve out and pairing on an unbundled basis with some potential disability providers that we'll go over.
Sorry.
Oh,
Is it possible to get this slide? Because I can't see it.
Bigger?
I've been
Yeah.
following everything
We didn't get your part of the report in the agenda materials. We just.
Oh, it's at the very end.
Oh,
Yes.
at the end? Okay.
642.
Sorry, yeah, no, both, yeah, I know both of us are looking.
You probably ran out of paper in your printer, right?
No, I'm trying not to print things. but-
Yeah,
Okay,
that's a good call in this case. Yeah.
good. I thought I'd scroll down and, oh, okay.
Yeah.
Great.
Thank
No,
you.
Thank you.
You.
Yeah, okay, attached, sorry.
Yes, yes. For Securian, we do have on the subsequent slide a pairing with potential disability carriers, so you can see what their overall totals look like. And we'll look at that next. For Hartford, they are 5.8% below current, Standard coming in at 12.9% below current, and Voya coming in at 19.9% below current. On the next slide, again, Securian did not quote disability. So in order to look at a total program package of what that could look like for Securian, we needed to pair them up with a disability provider, disability quote that was provided on an unbundled basis. Securian, again, they don't provide disability coverage. So this isn't that they decided not to bid on it. It's just that they don't provide those services. So we took the top 3 unbundled quotes, and that were the lowest cost, and that was MetLife, Voya, and Standard. And you can see what that looks like. Securian paired with MetLife comes in at 13.2% below current. Securian and Voya comes in at 18.3% below current, and Securian and Standard comes in at 14.7% below current. Looking at plan enhancements, if we were to pair every single one at this point in time, the report would be over 1,000 pages, I'm sure. So we decided to show you what the maximum plan enhancements would be. So you kind of have your base match the current with on one side, and then we wanted to show you what the maximum cost would be with all the enhancements that were requested, with the understanding that you could take some variation there in between. So for maximum plan enhancements on a bundled basis, Aflac is coming in at 3.5% below current, Lincoln 1.5% below current, MetLife relatively flat at 0.4% above current, New York Life 7.1% below current, and then certain vendors opted not to bid certain enhancements. So we have that noted here for disability. In particular, certain carriers did not bid on those on an enhanced basis. So jumping over to Standard at 6.2% below current for total program, and Voya at 11.3% below current. Again, same convention. We did a Securian pairing for those max enhancements follow on the following slide. And again, with those bidders that provided unbundled quotes, meaning you could tick and tie and plug and play for those and their quote on disability. They are coming in Securian plus MetLife at 1.3% below current, Securian plus Voya at 8.2% below current, and Securian plus Standard 5.6% below current. I just want to pause there real quick and emphasize from a bundled and unbundled perspective, and Borden can speak to this. Based on your current experience, the way the program is currently running, a bundled approach makes the most sense for all 3 programs overall. There is a lot on the admin side that speaks to warm transfers and automations of the coordination of the benefits between the programs. Especially when somebody goes on to disability claim, that it speaks to enhanced administration. There's a lot more talking to. When you have a disability carrier, for instance, providing disability, and then life on the other side, there's not that ability to kind of talk. If somebody's on a disability claim and they have waiver of premium, that's not necessarily triggered for a different vendor to trigger that waiver of premium on perhaps the life and AD&D side. So we just want to call it, there's reasons why placing coverage, it makes sense for a single vendor. From an experience perspective, Gordon, do you want to touch on that?
Yeah, so if we look back over the last 5 years at the plan experience, your loss ratios are, well, but there's a few years where your loss ratio goes above 100%. And depending on the magnitude, especially on the life insurance side, it could be substantially above 100%. On an unbundled basis, that means that your renewals could reflect an increase because your loss ratio went up. However, if it's on a bundled basis, you have more lines of coverage. You have the life coverages and you have the disability. And if we look at that on a blended basis, your loss ratios have averaged between 75 and 77%, which is a very healthy loss ratio. And so I would encourage to maintain a bundled approach, those coverages from a financial perspective.
So when you say looking at those ratios bundled, are you saying that the companies look at that ratio also, not just from your perspective as our administrators, but that the companies are looking at that loss ratio that way?
Yeah, I think the fact that on the bundled basis, you see those offerings below current is because they're looking at the entire lines of coverage, and they're able to get to that point because, again, if you're at 75, 77% in that range, that's a very healthy loss rate.
It's also the reason why some bidders chose to bid only on a bundled basis as well and propose in that manner.
Has a question up in that sense.
Yes.
Where one of them, well, MetLife was $115,000 over, and some of them were over $2 million. All those costs entirely passed on to the employee, right? The city doesn't pay.
Not entirely. No, the largest enhancements that were requested actually were for the city paid benefits in the form of the higher basic life premium and the higher core disability benefit premium. So, sorry, the city's going to bear the burden of that cost more so than the employees will in that case. For the enhancements, one of the things that our analysis assumes is that coverage remains exactly the same as it is today, which is it's a little bit of a misnomer because we know, for example, if you're going to start offering a child life benefit of 20,000, I know a lot of parents are going to jump on that. However, we don't know how many, and we don't know when. It could be now, it could be, down the road. So we couldn't assume what that migration would be to those higher policy levels. So we assumed that they stayed the same and then just comparatively looked at the rate differential on an assumed basis there. So that's also part of what our analysis contemplated. That
Well, a question, I don't know if this is where you want me to do it though, but so what is the cost to this? Like, what's a guesstimate of that additional cost? If you're getting there, never mind.
Yeah, no, I actually have that. I think it's actually in the other chart. Let me pull that up. I'll admit, 676 pages was a lot for me.
Yeah.
So it might have been
I'll admit
included
so too.
in their share of the report. There is a breakout, and I'm going to pull that up right now. I don't know if it's more quicker than what Paul's scrolling could do.
Well, what I can say is right now, just for clarification, the only thing the city pays for is the basic disability benefit, which is variable by salary cost, but still quite low. And then the basic life insurance benefit, which is extremely inexpensive because we are capped at the 10,000 rate. So in current benefit structure, still the majority of the figures that were displayed on this page that Keenan had is by the employee.
So
Checking my page there, this one.
Oh, that one.
So AD&D is 100% employee only. Life program, the city's portion of that is extremely small. The majority of that cost is going to be the buy-up of the employees. But same thing with disability.
well, on the disability side, the buy-up is about 6 million of that currently, roughly. For AD&D, Paul's correct, that is 100% employee paid. For the voluntary life, I got a calculator here. Rough math is it's about 11.3 million for employee, 573,000-ish for spouse, voluntary spouse, and about 27,000, 27,500 for child premium. Does that help?
Well, just so what is the city going with this plan versus the current plan or a lower, like the current plan, I guess, how much additional is the state paying?
Well, so that's gonna be our second decision factor.
Okay.
So, today we're essentially trying to pick a vendor for existing services.
Okay.
And then all the enhancements is gonna be a choice that the committee will make separately and secondarily, because there are any design changes. So maybe now's a good time for time check. We are at an hour. I know this is extremely complicated, extremely, that's a lot. Our next step was to talk about those service enhancements, which you're not gonna make a decision on today, but to give you that picture. And we can do that somewhat quickly. But is everything making sense so far?
Sorry, I should have been apologized. I do have a question though. So
Sure.
the 0.4% at the bottom of this page in the middle, I'm looking at the MetLife column, right? Does that represent the additional cost with the plan changes we're talking about?
That's the max.
That is maximum
If you took
everything,
everything we asked for to the maximum dollar amount, that's
0.4%, or 115,000 on 26 million. roughly.
correct.
But this is, on this page is still current services.
But I think he was referring to the next page,
Okay.
Yeah. the maximum plan.
This,
Yes,
okay.
yes, that's correct.
How many pages would we be at if we didn't look at the non-bundled? I mean, yeah, we're joking,
Yeah.
but it is a little much for us
Yeah.
to digest every possible scenario.
Yeah.
In a meeting like this. So,
Yeah.
I mean, I would have been comfortable. I mean, I appreciate the work you guys did, but I personally would have been comfortable not seeing those given the outcome, which is that everybody says it's cheaper and in everybody's best interest to look at it.
Right, right.
That's not a criticism, just not.
Thank you.
Huh?
From a scoring perspective, the city did go over the scoring already. We landed in a very similar fashion to the city. Slightly, there were a few slight differentiators in there in terms of total score and kind of who landed in top three. But overall, very similar for life, AD&D, and disability. And at this point, from a recommendation perspective, all 9 bidders were credible bidders. They all provided very valid proposals. MetLife did come in scoring the highest because they did most closely align with the objectives of the RFP in terms of providing that better member experience, providing that better administration experience, and while still providing the same or perhaps enhanced services. They would be a recommendation for an award. However, if you do accept the recommendation, we strongly urge that post-award negotiations process to look at the financial picture and perhaps tighten some things up there. As well as address any underwriting caveats, and again, also to start looking at negotiations on potential enhancements that the committee could consider for adoption. We do think the recommendations to increase the life insurance policy provide a lot of value for your employees and the folks who participate in the plan, both on a basic life perspective and also on a voluntary perspective. Folks are buying the coverage because they want to have that financial security should something happen to them. So giving them the choice to have a higher coverage seems like a very reasonable enhancement to include. Additionally, for the disability, we also do highly recommend a look at that core benefit, increasing that to index up to provide a little bit closer to 100% income replacement should folks have a personal injury or illness and they have a need for that income replacement while they're off recovering for those types of things. So we do recommend at least looking at those as part of that post-award negotiation process. And that is what we have.
So that means that if we're good to proceed with talking about enhancements, which is still step 2, that brief overview of what was identified as enhancements. We'll go back to page 60 of the report. They're all charts, so hopefully easy to follow. Let's go by one starting by.
Again, so we did already mention some of the enhancements, but this chart specifically focused on that were specifically expressed for the JLMBC. So on the first part here, we have this encompasses the coverage options, which Megan already went through. The answer we're looking for is to increase the base from 10,000 to 50,000, and most bidders agree to that. However, securing did not agree by 15K. Okay. Moving on to the supplemental life or voluntary life. All bidders agreed to increase up to a maximum of 7 times salary or $1 million, as well as increasing the child life benefit from 5,000. We also asked bidders if they were willing to eliminate which reminder, once in our current plan, once employees reach the age 65 or 70, they do experience a reduction in coverage by 65%. And when we asked that, all bidders agreed that on to the next page, we also wanted to ensure that funeral assignment was part of and most providers gave various responses about that. We specifically wanted to know how they would expedite funeral assignments and whether they can process that prior to our current benefit asks to requirements to do a funeral assignment is to submit the fee first. Then the funeral assignment. This can take a long time depending on when the death certificate is available, and it's not under anyone who knows whether or not it's good. And that can cause a lot of strain for them. So really looking to see how these vendors just pointing out that life is given to provide that service without it's back. Another point is we wanted to know how the vendors would improve member education. That's something that we talk about a lot, how to ensure that members are receiving the information, how to use the benefits. So that's according to the chart, a lot of vendors were willing to provide specific tools or toolkits for members. And that's what out from that life is that they have a dedicated communication specialist that would be focusing on this portion. Next, we also wanted to see how the bidders could improve the evidence of insurance. Currently, we have members enrolled to life insurance plan. Usually it's 3 times or higher, where we would request information from employees to see if they're eligible to benefit. And currently it's a long process for them to see if they are approved for them. We wanted to know how that is automated. And most vendors agree to automation for that aspect. And something that stood out for MetLife is that they are able to set up a single sign-on process in partnership with TELUS, who is our current third-party administrator. They're the ones that process all open enrollments. And through their trusted authentication process, employees are able to sign on to the TELUS site and then be transferred to the MetLife standard without having to sign out and doing a separate username and password, leave the EOI process, and then take it back to TELUS website. We are planning to see improvements in that respect. Other aspects is we wanted to know how they would reduce the paperwork, claim associated with the claim process. And for the most part, all for the most part, they are able to, but wasn't a really big fix for how to reduce paperwork, but wanted to point that out there. And second to last, I also wanted to know what kind of stack vendors can provide for conversion or portability. And conversion and portability allows members whose benefits terminate, whether it's leaving the city or having reduction of work hours, they can continue their life insurance policy after that through conversion and portability. When asked what vendors can do that, only Lincoln and MetLife provided specific answers to this process. MetLife is able to offer something called a plan smart financial. This will help employees who are losing benefits due to retirement, leave employment, or reduction of coverage. They'll be able to provide support to these employees, help them make informed decisions. This goes back again to healthy recovery. Lastly, like Megan mentioned, we also wanted to which vendors would be willing to provide whole life and only MetLife would be able to provide that. Those are the key aspects for life insurance. Now, moving over to disability. Like Megan mentioned, we wanted to enhance the current coverage options. And in the RFP, we asked for the bidders to provide the minimum of 5 plan designs. However, bidders were not penalized for quoting all plan designs. We gave them the opportunity to vote on which designs they wanted to quote for. And option 1 is not listed here because it was just a request to batch the current. So options 2 through 6 is provide what Megan mentioned earlier, an increase to the maximum weekly benefit. Currently, it is at $6. Reset to 1,000. And on the second part, we also wanted to play with changing the duration of the elimination period. And the elimination period, they're known as the benefit waiting period, is the time that members have to wait before they receive their disability. So read that, what we're looking at. Pass it on to Benedict to start up.
Again, I'll just discuss the rest. So for mental illness, given the nature of this disability, we wanted vendors to confirm the level of care they can offer members filing or dealing with mental illness. So all vendors answered that they utilized medical professionals of various levels and backgrounds to interact with the employee for treatment, education, and guidance, and etc. For improving the claim denial experience, given the nature of denial, we want to see what vendors could offer to improve the denial experience aside from the standard denial letter. So for improvements, in addition to the letter, some vendors will attempt to contact the claimant via phone to explain the denial, such as Aflac, New York Life, Reliance Matrix, and Oya. And some vendors will also notify the employer, such as Hartford, Lincoln, New York Life, and Standard. Now for improving the premium waiver, again, as a reminder, this one asks vendors how they would improve education / enhance premium waivers for applicable members, such as those with family medical leave and approved claim members. So for education opportunities, only Aflac, MetLife, and Standard offered some degree of education opportunities, such as a microsite, documents / pamphlets, and or a dedicated account specialist. Some vendors also answered that they can improve the process by providing support such as Lincoln, MetLife, and New York Life. For simplify / improve return to work / reasonable accommodation process, all vendors answered that they have some services in place to help employees return to work. and even offered medical staff as part of the process. Of the vendor answers, only Aflac, New York Life, and Standard mentioned working with the Reasonable Accommodation Office. And for sick time usage, this has to do with the city's current process that allows employees to code from any of the available leave banks while a claim is pending approval/denial. Any offsets that may be defined are taken on future disability benefits payable and not through other means such as payroll adjustments. But all vendors but New York Life agreed to this process. And then finally, for improving benefit waiting period during workers' comp, all vendors agreed, with Lincoln and MetLife signifying they are willing to work earlier than other vendors. Thank you again for your attention so far. This concludes our portion of the presentation. Now we're going to pass it back to Matt and Brianna, who will be covering AD&D.
Good morning. So I'll be discussing the program enhancements for accidental death on dismemberment. To begin, all the proposers are able to match the different types of coverage levels with the LA Well Health Plan. In the eliminating age reduction, all the proposers were able to eliminate age reduction provision except Lincoln. This is important because eliminating the age reduction ensures that older individuals receive the same financial protection as younger ones. In the improving benefit payment experience, Hartford, Aflac, and Securian weren't able to offer improvements compared to the under vendors. Hartford's proposal is inadequate as it cannot provide lump sum payments for any amount and retains checking amounts for over 25 grand. Aflac does not support benefit payments into a secure checking account or match our current installment payment options. And Securian restricts lump sum payments to amounts over 25 grand. The other proposals offered a more comprehensive benefit payment experience. In the improved member education, New York Life mentioned only microsites and webinars for educational services. They omitted any in-person or written services. Securian did not offer any in-person services and only mentioned print-friendly content for written without further detail. The standard provided limited information and not specified online tools or offered, again, written services. And lastly, the reduced improved paperwork associated with the claim process. Aflac and Lincoln both present limitations regarding claim processing. Aflac disallows employee claim filing, while Lincoln lacks web-based claim filing for employees. And that concludes the AD&D program enhancement section.
Anybody have any questions? So after all this information was received, reviewed, and after all the final scores, MetLife ranked the highest by a slight margin in the overall scoring of each individual RFP. And after the review and assessment of all the proposals submitted to the joint life insurance, disability, and accidental death and dismemberment RFP, the review committee has determined that the LA Well program and its members may benefit from the proposal submitted by MetLife for each of the individual insurance services requested in this RFP. Our recommendation is to select MetLife under the stipulation that they are able to negotiate with the city and mutual terms are agreed upon to sufficiently satisfy multiple areas inclusive of contract requirements, price and premiums, and service level agreements. If negotiations with MetLife are unsuccessful, the city may then begin negotiations with the next most qualified proposal as outlined in RFP sections 3.1.14 and 6.0. Therefore, it is our recommendation that the JLMBC should recommend to the general manager of the personnel department that A, MetLife be selected as a provider of the LA Well program's basic and supplemental employee and dependent life insurance services for a 3-year contract beginning January 1st, 2025 through December 31st, 2027, with an option for up to 2 additional 1-year terms, pending successful negotiations by the personnel department with MetLife for at a minimum contract requirements, prices, premiums, and service level agreements. B, MetLife be selected as a provider for the LA Well program's short, long-term disability insurance services for a 3-year contract beginning January 1st, 2025 through December 31st, 2027, with an option for up to 2 additional 1-year terms pending successful negotiations by the Personnel Department with MetLife for at a minimum contract requirements, prices, premiums, and service level agreements. And lastly, C, MetLife be selected as a provider for the LAWell program's accidental death and dismemberment insurance services for a 3-year contract beginning January 1st, 2025 through December 31st, 2027, with an option for up to 2 additional 1-year terms pending successful negotiations by the Personnel Department with MetLife for at a minimum contract requirements, price premiums, and service level agreements.
Mouthful.
Yes.
Good question. There were several times in the presentation where we heard the vendors saying, if they were a finalist, they would give you more information. So was there a step between there and now where there were finalists, or were all of the vendors considered finalists?
So in our process, we do not have a best and final step. We don't have anything else in that. So it's our understanding that when they're saying that, they're just not willing to disclose it unless they're selected.
I have a few questions, but I don't, these might be things that you're gonna negotiate down the road. That's okay, understood. So you say there's this new enhancement of a buy-up up to 50,000, that's without medical eligibility? Or
For buy-up or
for the
basic?
Right now, 10,000 basic, you're saying it might go up to 20, or, and there'll be a buy-up option for that, for these employees? Or that will be straight covered by the city, up to maybe 50 grand?
So the core benefit, which is currently 10,000, we can put up to 50,000. That is still going to be employer paid. That will always be employer paid.
Okay.
So there is, if the committee decides, we'll bring that cost forward, identify what it would be for the 50,000 baseline. Remember, that is the amount, the threshold before imputed income gets reported for anybody. And then the buy-up portions are still 100% voluntary on the employee.
And that's the up to a certain percentage of your salary or double, whatever, right? Up to $1 million, right? And that's the employee. And that requires medical eligibility for both the employee and the staff.
Correct. For currently right now, it's at 3 times, 4 times, or 5 times where employees would have to provide a medical history statement.
Is that something you negotiate in the next round of whoever you select? You negotiate those details as well?
We would
Yes.
negotiate that.
I guess just one last question and then save the rest down the road. So we currently give our members receive meth. Is this gonna be a problem, like if they wanna buy from us and the city? Will they be able to do the buy up on both ends?
I think we would have to check with the policy and make sure there isn't a problem. I'm not sure if Keenan can talk about it at this point.
There shouldn't be an issue. They'd be buying under an employer policy, and under your policy is 2 separate policies.
And there won't be any confusion in like our portal when they log in, it would bring up the city. So maybe just if they're chosen, those are things that I want to talk to somebody about.
That would definitely be a part of how we're going to set it up through the implementation process. As we had kind of alluded to a little bit, there is a potential opportunity that has not currently existed with the contractor that we have as the incumbent to be able to have that single sign-on. So there should be, in theory, a better understanding from an employee that they're getting towards the city's MetLife portal, because they're going to be going through the Keeping LA Well site. At least that's one direction for them to go. But definitely education was a big piece of everything staff was looking at. And trying to make sure that we're tying it clearly with the member when we do launch the product is something for us to make sure that we're talking about negotiating with them as we get closer to that. Should they be something?
Yeah, I think that's really important because when you go with the union plan, it just feels different. It's a totally different name. If this is the same name, people might assume, well, I already have that one, and not realize it could be additional.
I don't have a question, but don't think it can be overstated, how grateful we are for all the work that you guys did. We know this was a huge undertaking to pull this together, all these 676 pages. So a lot of work, a lot of great work by your team, and we appreciate it.
Is it still desirable or desirous on the part of staff to have us take this in two pieces? The
Well,
decision for the vendor and then
we
enhanced.
we definitely can entertain if you have a preference for something on plan design, but we don't have a position right now to take action on a plan design change today. We are planning to, for the June meeting, adopt the plan for 2025, including other plan design changes that we would have for other benefits.
Right, so then I'd make a motion and we go ahead and adopt the staff's recommendation to select MetLife.
Second.
And just to clarify, that's for all three
For the
benefits,
bundle.
correct?
Go ahead.
Ready for a vote? We'll
Yep.
go into order of the agenda. So Tony, your vote.
Aye.
Tony votes aye. The recommendation for all three. Correct. Paul, your vote.
Aye.
Paul votes aye. Petty, your vote.
Aye.
Petty votes aye. Janita, your vote.
Hi.
Janita votes aye. Marlene, your vote.
Aye.
Marlene votes aye. Chad, your vote.
Aye.
Chad votes aye. Esteban, your vote.
Yes.
Esteban votes aye. And Lisa, your vote.
Aye.
Lisa votes aye. It's unanimous. The motion passes.
Something clarify question. Does that automatically, because they mentioned that if negotiations don't go well with MetLife, then Voya or the second place, this one would be negotiated with, is that automatically included in this motion or is that?
Well, it's part of the regular RFP process. Should that happen, should we not be able to get to terms with a selected vendor, we would be coming back to the committee and telling you that's where we at and talk about next steps.
So
that is
so
part of the-
it's not an automatic that staff would go to a second bidder. It comes back to us before we do that.
We would give you an update.
Okay.
That would be the best practice too. But the authority technically in the RFP is for the city to just go ahead to go forward with it, but we would
I
bring
got
that up.
Okay, thank you.
All right, well, it looks like we can move on to the concluding items. The request for future agenda items. Are there any? All right, our next regular, moving on to next regular meeting is, dates are June 6th, 2024 will be a regular meeting. The July 4th meeting, holiday, so that meeting's canceled. And then the next meeting after that will be August 1st, will be our regular in-person meeting. There is nothing else. We can, it's 10:33. And we can consider this meeting adjourned.
That was thick.
Are you figuring out information?
Yeah, I'm gonna find a place to do some work. I've got computer.
Leave it at that.
Yeah.